This is Nightly Business Report with Tyler Matheson and Sue Herrera.
The hunt for yield. The Dow closes at a fresh record, but where else can investors find return as the market inches higher?
Rise of the machines. Artificial intelligence is transforming the job market. Now one city considers a tax on robots.
Hitting a wall. Flipping houses has been hot, but now those same flippers are flipping out. Those stories and more tonight on Nightly Business Report for Thursday, September 14th.
Good evening, everyone, and welcome. The Dow extends its hot streak. The world's most recognizable stock market index closed at a record for the 38th time this year, even as the other major averages were off slightly. The Dow's advance today wasn't big, but it was enough to put it at levels never seen before. The blue chip index added 45 points to 22,203. The Nasdaq fell 31, and the S&P 500 was off 2. The run to records for the Dow was gradual and kind of quiet, as if the index was just crawling along. But something is helping lift that part of the market, and Bob Pisani explains what it is.
The Dow notched its third record close of the week today, even as the Nasdaq and the S&P closed slightly lower. The Dow remains on pace for its best weekly gain since April. That was nearly 5 months ago. Crude oil topped $50 per barrel for the first time since August 10th, sending energy stocks higher. Leaders included Devon Energy, Cabot Oil, Schlumberger, and Anadarko. But there was some weakness out there. Other sectors that had been strong in the past week did run out of steam today. So, for example, bank stocks had been up 3 to 5% for the week, but most closed lower by about 1% today. And retailers, which had also been strong, having a great week, they also declined today. Tiffany, for example, was down nearly 5%. The Gutter Investment Authority sold 4.4 million shares. That's over $400 million in a single sale, though Cutter still retains a nearly 10% stake in the company. The move wipes out a nearly 2-week rally in the jewelry maker. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.
So, with the U.S. stock market closing at yet another record high today, where should you be looking for performance and return now? James Camp is Managing Director of Fixed Income at Eagle Asset Management. Mr. Camp, welcome. Good to have you with us.
Tyler, good evening.
It's terrific. You know, when the market gets high, as it is these days by some measures, often what happens then is that the income portion of your total return becomes ever more important than the capital appreciation portion of it. So does that argue that I need to be looking at different kinds of securities, whether it's preferreds or high dividend paying stocks or even some fixed income today?
Yeah, Tyler, we're a big believer that we want to invest in companies that are sharing the good fortune that they've had over the last couple of years with shareholders. And more to us on the income side of the equation, that's to be an owner of a company versus a lender to the company. So when we look at yield and income-oriented investors, for us right now, given the relatively low payout ratios versus history, the relative health of the risk markets for a variety of reasons, we do favor the ownership side of the balance sheet versus being a bondholder.
What about going outside of the United States and looking perhaps at higher yielding instruments in, say, either emerging markets or Europe, which has been doing quite a bit better than a lot of people thought it would?
Yeah, so I would say the risk side of the European market is certainly productive. The valuations are better for the equity markets over there. They seem to have turned the corner. We are very skeptical, however, on the financial system and the indebtedness of the European banking system. So we might stay away from pure debt instruments overseas and remind ourselves that sovereign debt yields are still largely negative, even in the Eurozone. So it's a difficult animal to be an income oriented investor overseas right now.
You said you prefer the equity or ownership side of the balance sheet over the debt side. That said, where are you finding value? What categories or kinds of stocks?
Well, the screens for us really are yields that are above market. The S&P right now is around 2%. We like to have about a 50% premium to that, so around a 3% yield. Names that are falling into our purview are some of the technology names that are now more mature and are passing through cash flow. But You know, as Bob mentioned on the first part of the discussion tonight, there is a tiering that's going on in the equity markets. There are winners and losers now, and we're beginning, as central banks start to change the rate markets, to separate really good from really bad, and that's creating good value opportunity for some of the stocks that were, frankly, under yielding a few months ago.
Right. Very quickly, how you doing in St. Petersburg, Florida?
Appreciate you asking. We're doing very well here at the home office. A lot of associates still without power, so it's a difficult slog, but Florida's ready, and we're all rallying around each other. We appreciate your thoughts.
Good to see you bouncing back. James Camp with Eagle Asset Management.
Some of the weakness in today's market came from concern over inflation. Prices last month rose thanks to higher housing and gas costs, which are likely to fall as rapidly as they advanced because of heavy damage to major refiners in the Houston area following Hurricane Harvey. The Consumer Price Index advanced 0.4% in August, its biggest increase since January. But surprising many in that report was a deceleration in the cost of medical care, rising at its slowest pace since 1965.
There were mixed messages today on immigration, an issue watched very closely by businesses. Hang on here because it's a twisty story. Late last night, there were reports the president and Democratic leaders had come to some sort of agreement on the Deferred Action for Childhood Arrivals, or DACA program. That's the Obama-era plan the president canceled a week or so ago. It deferred deportation for children brought illegally into the U.S. by their parents. But this morning, the president tweeted that no deal was made last night on restoring DACA. Then he said that he and congressional leaders were fairly close to an agreement, provided it was paired with massive border security. Later, touring hurricane damage in Florida, he said, quote, "If there's not a wall, we're doing nothing." Though he also said wall funding needn't be a part of a DACA agreement. Still later in the day, as he reboarded Marine One, he said he remains committed to finding a way to reinstate some variant of the program. Separately, House GOP Speaker Paul Ryan distanced himself from the idea that any deal had been struck.
And the president also said today that the tax reform package being crafted by lawmakers will be revenue neutral if economic growth spurred by the legislation is taken into consideration. On Capitol Hill, the first hearing on tax reform took place, but at the start, the chair of the Senate Finance Committee had a blunt message. He made it very clear that negotiators from the White House, Senate, and the House would not dictate tax reform to his committee.
Anyone with any experience with the Senate Finance Committee knows that we are not anyone's rubber stamp. If a bill, particularly on something as consequential as tax reform, is going to pass in this committee, the members of the committee will have to be involved in putting it together.
Senator Hatch said any tax framework is only a guidepost and not a binding commitment.
The Treasury Department imposed financial sanctions today on Iran. 11 people have been sanctioned for supporting Iranian activity the White House considers hostile, including cyber attacks against U.S. financial institutions. The action freezes any assets the people and companies hold in the U.S. and bars U.S. citizens and residents from doing business with them.
The Trump administration late yesterday blocked a Chinese-backed investor from buying Lattice Semiconductor. It's the fourth time in a quarter century that the president has prevented a foreign takeover of an American company, and China is not happy. Eunice Yoon reports from Beijing.
China had what's become a standard reaction to any steps that foreign governments take to try to curtail Chinese business activities overseas. It cried protectionism. At a regular press briefing, the Commerce Ministry expressed its concern, saying, "We believe that conducting a security review for an investment deal in sensitive sectors is a country's legal right, but it should not become a tool to promote protectionism. We hope the relevant country, the U.S. in this case, can see such normal business activities objectively and fairly and provide fair treatment." The state press went one step further with the idea that China is the one that's being treated unfairly. The Communist Party paper, The Global Times, pointed out in an editorial that China is not in the top 10 compared to the UK, Japan, or Germany when it comes to foreign direct investment in the US, but that nearly 1/4 of CFIUS's cases involve Chinese companies. CFIUS is the committee that reviews foreign investments in the US. The paper said it's disturbing to see the U.S. plans to expand CFIUS reviews of Chinese investment investment in other so-called sensitive technologies, such as in artificial intelligence. And it went on saying, as more Chinese companies seek to invest abroad, the U.S. may regret a lost opportunity if it insists on protectionism. There's an implicit threat in those comments, and China has made threats repeatedly, but so far Beijing has not announced any actual countervailing steps after Trump's decision. For Nightly Business Report, I'm Eunice Yoon in Beijing.
Still ahead, taxing robots? Sounds crazy, but one city says if they're taking jobs, why not?
The head of Moscow-based Kaspersky Software will be heading to Capitol Hill. Eugene Kaspersky has agreed to testify later this month about the security of the cyber firm's products as long as he could get an expedited visa. As we reported yesterday, Kaspersky's antivirus software was ordered off government computers by the Department of Homeland Security.
The Federal Trade Commission is investigating the massive data breach at Equifax. The FTC does not normally comment on ongoing investigations, but the agency's acting director of public affairs confirmed the probe in light of the intense public scrutiny. Shares of Equifax were off another 2% today and are down more than 30% over the past week.
Senator Al Franken has some concerns over Apple's new iPhone, which can be unlocked with a scan of your face. The Minnesota senator asked the company to provide more information about how facial recognition will affect users' privacy and security. The senator also wants to know what happens to that face scan data and how Apple plans to respond to requests from law enforcement for access to the facial recognition system. The senator asked for a response by October 13th.
It's a radical idea, taxing robots. Bill Gates first suggested it earlier this year, and now a big California city is taking it one step further. Aditi Roy is in Cupertino, California.
Hey, can I get some water?
Bill Byer is traveling for work this week. He came back to his hotel room after a run and realized he needed some water. But when he opened the door...
Ah, sweet. Thank you.
He got his water and a surprise, a robot at his door. Byer's just one of the customers benefiting from the robot butler, or Bottler as he's affectionately called, at the Aloft Hotel in Cupertino, California. Bottler runs deliveries to customers, which the hotel's general manager says frees up the front desk person to do other things.
It just makes it easier for the staff. It kind of takes up some of the menial tasks. So deliveries, things like that, allows us to have people stay at the desk and stay engaged with our customers.
Bottler costs about $24,000 a year, about $6,000 less than what an average front desk worker makes in a year at the Aloft. That doesn't include things like vacation time and benefits. And remember, people often get raises over time, while the cost of robots will get cheaper as they become more common. But some believe robots like Bottler are hurting the U.S. economy by taking jobs away from humans.
If we don't prepare now, and if we don't support the automation that's going to happen, I think that it could potentially be an incredible disaster with 37 to 47% of jobs that currently exist displaced by robots.
Jane Kim is a supervisor in San Francisco. She's worried about robots and automation displacing workers and wants to do something about it. Inspired by Bill Gates' endorsement of a robot tax in an interview with Quartz magazine earlier this year, Kim has created a committee to explore the idea. If a robot tax is implemented, robots could be taxed just like people are. Business owners who use them would pay income tax, even Social Security. Eventually, Kim hopes to have a ballot initiative for California voters or a bill for legislators to decide upon.
I believe it's going to be a portfolio of policies that are going to help us prepare our workers for the future of work.
It's a subject that's sparking increasing controversy as more and more robots do things that people do in factories, research labs. Some are even making pizza. One recent report from Forrester found that automation will lead to a net loss of nearly 10 million jobs in the U.S. by 2027. But critics say a robot tax is flawed because it kills innovation, and with so much automation around us, it's too hard to define exactly which robots would be taxed. Bottler's creator says, I believe automation will create more jobs than it eliminates. While the hotel's GM says Bottler isn't taking away any jobs from humans, Bayer says he didn't mind talking to a robot instead of a person.
I felt like the robot had a personal touch of its own, and I would rather be prepared to deal with other people than to just get surprised, and especially in an intimate setting like your own room.
If a robo-tax is passed, Kim hopes that the money raised will go towards worker retraining or education. Here at the Aloft Hotel, the general manager tells me Bottler makes between 15 to 20 deliveries a day, making him just as productive as a human worker. For Nightly Business Report, I'm Aditi Roy, Cupertino, California.
Mark Hamrick with Bankrate.com joins us to talk about this. Mark, welcome. Nice to have you here.
Nice to be back, Sue.
Aditi kind of highlighted this, but you know, this is a little bit of a slippery slope if you decide to tax quote-unquote robots. What's the difference between robots and automation on an auto assembly line? I mean, it's kind of murky, isn't it?
It's a great question, Sue, because first of all, we have to ask the question, what is it we actually want to tax? Are we trying to tax something that looks like a human that's coming to the hotel room, or are we talking about the broader aspect of automation, which is very present now in our everyday lives? And so in the piece, we heard the figure about $6,000. It'll be curious to see what they think, for example, the amount of tax should be attached to that. And then what do you do with the revenue? Because if you don't take the revenue and apply it to helping the workers who are displaced, then you're really causing a bigger problem.
Yeah, I don't want to quarrel with Bill Gates. He's a heck of a lot smarter than I am. But this does feel like a tax on progress, or like taxing cars because they put a lot of horses out of work.
Right, and you know, I don't think Cupertino wants to be, or San Francisco wants to be hostile to technology. But there is a looming potential problem on the horizon, because I think, you know, we watch the advance of technology these days, and it seems to be accelerating. And that means, if nothing else, the displacement of workers by that technology is accelerating. And we know that that has caused some unintended consequences in the United States, as has globalization.
Well, how much of this do you think is stemming from the fact that if a robot or automation displaces a human, cities are not getting the tax receipts and the money's coming in from that human that is paying their state and local taxes?
Yeah, and robots don't vote against taxes, right? So they're a convenient target. And I think about, you know, we're here in Washington, D.C. There's a massive casino nearby that cost about $1 billion to build. Cities all across the country have embraced that revenue really as a means of, you know, trying to capture more dollars for their government, and they've sort of lowered the standard on whether they think that's a problem or not. I do think that this is going to be a growing issue, because automation and robots are here to stay, and that's going to launch a growing debate. The debate is not going to go away anytime soon.
On that note, Mark, thanks so much. Good to see you again.
Thank you so much.
Mark Hamrick with Bankrate.com.
Well, a rise in the cloud helps results at Oracle, and that's where we begin tonight's market focus. After the bell, the software giant reported stronger than expected earnings and sales and attributed those strong results to strong momentum in the company's cloud business. Shares initially rose in after-hours trading, but ended the regular day down a penny. And Pfizer said it saw positive trial results for its experimental prostate cancer drug. The medication, when used in combination with another medicine, helped patients live longer than if they underwent just the standard treatments. Pfizer shares up by nearly 2% to $35.73. And the Food and Drug Administration approved Amgen's cancer treatment. That's a biosimilar to an existing drug made by Roche. It is the first FDA-approved biosimilar for use in oncology. The agency said the approval of biosimilars can help spur competition and lead to lower health care costs ultimately. Amgen shares fell to $189.44.
The venture capital firm Social Capital Hagia Sophia raised $600 million in its initial public offering on the New York Stock Exchange. Social Capital is known as a special purpose acquisition company, or SPAC. It plans to invest in private tech companies that are not yet public. The company's CEO said Social Capital has found a way to appeal to tech companies that want to go public without taking the traditional IPO route.
What we're going to use the SPAC for is to curate, which we did, about 25 extremely well-known, thoughtful investors who we believe represent the best of the best. Mutual funds, sovereign wealth funds, extremely well-known blue-chip hedge funds. And now together, what we're going to try to do is to get to a better understanding of ground truth of some great companies, and then help those companies exist in a more stable context in a public market.
Shares of Social Capital rose 3% in their debut to 1031. The car safety supplier Autoliv said that it is weighing the decision as to whether or not to separate into two listed companies. Autoliv said it is considering splitting its electronics components business from the division that focuses on airbags and steering wheels. Autoliv said that the move would allow its electronics segment to better compete in a market that's seeing more innovation in autonomous driving technology. Shares jumped 12% to 127.15. And the home builder Lennar said it expects nearly 1,000 home deliveries to be delayed this quarter due to the impact from the hurricanes Harvey and Irma. The areas impacted by the two storms make up about 40% of Lennar's annual home building revenue. Shares were off fractionally to 50.89.
President Trump went to Florida to survey the damage from Hurricane Irma today. He met with local officials and first responders to thank them for their work, and he got an update on the recovery from Florida Governor Rick Scott.
We are working hard to get our power back on. Our utilities have restored over 4 million homes already. We're down to about 25% of our homes, and every person in our state wants their power back. We all want our power back. But I want to thank them for what they're doing so far. We have high expectations. We want our power back as fast as possible.
One of the hardest hit parts of the state, of course, the Florida Keys, famed Duval Street, lined with debris, homes and businesses damaged, some severely, others, of course, completely destroyed.
So as the cleanup efforts get underway, freight companies are trying to get operations up and running so goods can get to where they need to be. Morgan Brennan has our story.
On the heels of two hurricanes, transportation carriers are scrambling to get freight moving once again.
It actually happens a little bit quicker than you'd think. The companies are already staged prior to the weather, all of the resources they need to, repair and rebuild, and they do it essentially immediately as soon as they can get in.
Ahead of Irma, shippers diverted ocean cargo to ports further north along the coast, and trucks and trains were moved out of the storm's path. But as infrastructure is assessed and repaired, companies are getting back to work, and shipping demand is spiking.
Major storms in two contiguous regions of the country are creating a lot more demand for trucks to serve those areas, both in terms of resupplying the areas with supplies that are needed, in addition to supporting the U.S. economy. Immediately after the storms, there's a resurgence or a need to get supplies, refrigerated goods, foodstuffs into those areas. And then in the longer term, as those areas start to rebuild, construction and other materials need to go into those areas.
Trucking rates soared in the week between Harvey and Irma, according to DAT Solutions. While it's still too soon to know the full impact of Irma, rising diesel prices and demand for materials as recovery commences are expected to propel rates even higher. Some carriers are already sending convoys into Florida. Werner Enterprises deployed 100 big rigs south, filled with hurricane relief supplies from Home Depot. The interruptions to business and damage to infrastructure will dent transport stocks' earnings in the near term, especially since some shipments will never be recouped.
It's really all about sort of the disruptive aspect of not having any volume for a period of time to move. And then there's going to be some repair and damage dynamic that runs through the cost side. And then as we move forward over the course of the next few weeks, we would expect sort of a gradual recovery. It doesn't happen all right away, but we should start seeing volume growth again in the next couple of weeks.
So it's back to work, even for the railroads, which have fixed networks most vulnerable to damage. As companies directly in the hurricane's paths get tracks fixed and trains running, it's good news for investors, but also for consumers, since the peak holiday season is already in sight. For Nightly Business Report, I'm Morgan Brennan.
Coming up, why home flippers can't flip like they used to.
Mortgage rates remain at their lowest levels of the year. According to Freddie Mac, the 30-year fixed-rate mortgage averaged 3.78% last week. The 30-year is the most widely held type of U.S. home loan.
House flipping has seen a huge run-up in the past few years. Of course, as investors take advantage of tight supply in the market and also those fast-rising home prices. But something is now holding those investors back. Diana Olick explains.
House flippers are running into high home prices, and that's hitting their bottom lines. After 2 straight years of gains, the rate of home flipping, defined as buying and selling a home in the same calendar year, flattened in the second quarter of this year, according to a new report from Atom Data Solutions. Nationwide, close to 54,000 single-family homes and condos were flipped in the second quarter, which is more than 5.5% of all home sales during that period. The rate was down from about 7% in the previous quarter and unchanged from a year ago. So why the slowdown? A drop in profits. Home flippers saw an average gross return of more than $67,000 in the second quarter, representing a 48% return on investment. That's down from nearly 50% compared to a year ago. It also marks the lowest return in nearly 2 years. After peaking at 51% in the fall of last year, average gross flipping returns nationwide have decreased for 3 consecutive quarters. Flipping used to be an all-cash business, but in order to compete in a market with higher and higher home prices, more flippers are now using mortgages, upping the ante and the risk in an already risky real estate game. For Nightly Business Report, I'm Diana Olick in Washington.
And that does it for us tonight on NBR. I'm Sue Herrera. Thanks for joining us.
And thanks for me as well. I'm Tyler Mathisen. Have a great evening, everybody, and we will see you back here tomorrow night.